So how does Canada's housing market compare to other countries around the world? That's what I'm going to be talking about today. My name is John Passalis, president at Realosophy Realty. Catch all my latest writings at movesmartly.com. And if you find this video helpful, please hit the like and subscribe button to stay up to date on all my latest videos. So I think for a lot of Canadians and Torontonians, especially when we look at our housing market, we tend to think that the dynamics we see on the ground are very typical of many other housing markets around the world. And I thought I'd sort of take a moment today to sort of unpack why Canada is a little bit unique, and some of the trends that we see in Canada are not necessarily common in other countries. So one of the things I'm going to look at first is something called the price to rent ratio. And this is one of the metrics that economists use to determine whether a housing market is rational. I mean, whether the prices are justified by the fundamentals. In this case, the fundamentals that we're thinking about are rents. So in theory, house prices should be rising at a similar rate to rents to justify sort of this price increase, because the rent is the return that we get as investors, for example, or as homeowners. So when we look at the price to rent ratio in Canada compared to other countries, this next chart is from the OECD for the G7 countries. And what it shows is not so much the price to rent ratio, but rather an index of the price to rent ratio. And an index, the idea with the index is basically looking at, we're setting 1990 as our start date, and we're asking, well, how has the price to rent ratio changed over time in each of these countries? So when we look at this next chart, we can basically see that Canada's price to rent ratio was actually very similar to, I believe it's Great Britain and France up until around 2006. But since then has really exploded and outpaced every other country in the G7. And that's Canada, was Canada on the red line. And we can see the price to rent ratio has really taken off in Canada. And what this is saying is that house prices are rising far, far more rapidly than rents in Canada. Now, when we compare the actual growth in house prices, this next chart shows very similarly an index of prices. So how have prices changed since 1990? And again, we look at an index because it allows us to avoid the fact that, every country has different currency and is obviously real estate priced in their own currency. So the index just looks at how prices have changed. And we can kind of see, again, Canada's price growth has outpaced every other country in the G7. But the big sort of the thing that makes it a bit unique is, again, this idea that rents have not really accelerated very much. And the reason they haven't is because of a lot of people are buying homes, they don't really care about the rental income in Canada. And in fact, a lot of investors have come in and bought properties and have sort of filled some of this rental supply, which has kept rents relatively affordable, at least when compared to high house prices in the GTA. Now, if we actually want to look at the price to rent ratio in the greater Toronto area, so when we think about the price to rent ratio, let's just kind of hit pause and think about, well, what does this look like on, in real life? If I bought a home for, $500,000, and the annual rental income is $25,000, well, the price to rent ratio in that type of property would be 20, because I'm paying 20 times the annual rental income to buy my home, right? So that's rough, basically how the price to rent ratio works. So the higher the price to rent ratio, the more of a multiple we're paying relative to the annual rent. A low price to rent ratio is a more affordable market, because I'd rather only pay 10 times my annual rent to buy a home versus 40. So this next chart shows the actual price to rent ratio in the GTA since 2006 for houses and condos separately. And we can kind of see from the chart that the price to rent ratio has really exploded, especially for low-rise homes. Last month in February, the average price for a low-rise home was $1.68 million. The average rent for a low-rise home was $2,992, and that results in a price to rent ratio of 47. And when we look at condominiums, the average price for a condo is $836. Average rent was just over $2,400, which results in a price to rent ratio of 29. So these are very, very high levels for the price to rent ratio. And again, a lot of this is driven by the fact that we have a lot of investor demand that is buying homes, and they don't really care about the rental income because they've been capitalizing on the price growth. Now, what is kind of follow from here? Most likely what's going to happen is what we're starting to see, which is probably an acceleration in rents. Again, one of the big challenges for affordability in Canada is that our population is growing faster than our ability to build homes. Up until now, this has mainly pushed prices up for buying a home. But once people get priced into the market, once prices hit a ceiling, so to speak, and they plateau, well, we start getting more people potentially moving to the rental market. And this is likely going to be putting upward pressure on rents. And we're actually kind of seeing this all across Canada now. A lot of people who have left sort of these high price markets like Toronto, moving to the East Coast of Canada. Well, the East Coast now is starting to see surging house prices, or in the past year they're seeing surge in rents. Again, because a lot of the demand from households has moved to those markets and is really pushing prices up and rents up. And we're likely going to continue to see rents accelerate over the next year, probably, if people start giving up on the idea of buying a home because it's just too expensive. So not a lot of positive news, unfortunately, in terms of affordability, but again, these are sort of some of the dynamics we're seeing on the ground. And, like I said in past videos, at some point, if prices are too high and the disconnect between rents and prices are too high, we might see some easing in prices. But right now, there's still a lot of pressure and a lot of demand for housing in Canada because, supply hasn't been keeping up. I hope that makes sense. If you have any questions, please post them in the comments below or send me an email at askjohn@movesmartly.com.